Hey team, it's Mikey Millions here, and in this episode, we're going to talk about the 3 hottest IPOs hitting the market in 2021. I expect 2 of these stocks to absolutely print money, not just with meme stock energy, but from strong fundamentals and excellent business models. And one of them, well, I don't short stocks very often, but I might make an exception for this one. No reason for a long intro, let's get started. Here's my list of the most exciting IPOs of 2021. First up, Patreon. Founded in 2013 out of San Francisco, Patreon is now a unicorn valued at over $1 billion and rising. I expect this to be an absolutely game-changing company, even more so than it already is, and looking at its market position is giving me Shopify and Etsy vibes. Patreon is a membership platform that allows users to join a content creators community through either monthly contributions or a set fee per piece of content created. For example, a DJ might create a Patreon page and offer custom work in exchange for a set pledge. Or a painter might offer art lessons via Discord or Zoom in exchange for a monthly contribution. Fitness folks can receive custom workout plans from their favorite Instagram homie. Patreon is completely flipping the struggling artist stereotype on its head by allowing creators to connect with literally millions of people around the world and earn a living doing so. Likewise, people in need of either custom creative work or education can find real people willing to consistently create content for them. And trust me, the growth is palpable. Although Patreon hasn't filed an S1 with the SEC yet, we still have some data to go off of. As of March 2021, Patreon has 6 million subscribers and 180,000 content creators, with tens of thousands joining each month. As far as the business itself goes, getting in on the stock now would mean buying into a company with parabolic growth rates. As far as revenue goes, Patreon makes its money by taking a cut off the top of every creator's revenue. Depending on the plan the creator uses, this means taking between 5 and 12% of revenue. Patreon is privately held, so we don't have up-to-date financial information, at least not yet until we get closer to their IPO date. But back in 2018, Patreon processed $300 million in payments. This increased to $500 million by 2019 and topped $1 billion in 2020. I would not be surprised to see Patreon process $1.5 billion in payments in 2021, implying $100 million of revenue and climbing. And even better from a shareholder's point of view, Patreon's most recent round of funding in April 2021 valued the company at $4 billion, an increase of 3 times over from September 2020. What I really love about Patreon's business is that they have to do very little themselves. They don't need to create content, since creators are doing that. They don't need much advertising, since content creators advertise their own channels and bring new clients to them. Basically, Patreon has been able to pass off a lot of the heavy lifting onto content creators, which implies very, very strong profit margins for the company that closely correlate with rising revenue. We don't have an IPO date or ticker yet, but Patreon is aiming for sometime in 2021. Beyond being a content creator myself, for whom Patreon has made a tremendous impact on me personally, I am very bullish on this stock, and I will absolutely be selling puts and using the premium to buy shares. Next up, this is going to be a fun one, Robinhood. We all know Robinhood. We used to love it in the beginning, then it became more of a love-hate kind of thing, and now we just hate it. But no matter how you look at Vlad and his childhood in Bulgaria, we have to admit, Robinhood is a high-interest, high-stakes IPO. Robinhood really did spearhead the democratization of finance, and I do believe the company had a major influence on other brokers' decisions to reduce or totally eliminate commissions. And despite the fact that none of us really like this broker anymore, people keep signing up for some reason, and the platform has like 20 million active users with $682 million in annual revenue, most of it derived from payment for order flow. In other words, this platform has a lot of users to sell to their clients. We'll have more detailed information when Robinhood's S1 filing goes public. Right now, it's under SEC review and is still held confidential. But from what we do know, Robinhood does look pretty strong financially. However, I do suspect that lawsuits against them and their slowly rotting reputation will ding growth just a little bit. But I'm not excited about this IPO for Robinhood's financials. I'm excited because I think WallStreetBets and the retail investors are going to blow this thing up. Something we forget about share ownership is that when you buy shares, you literally own a piece of the company. You, as a shareholder, own part of the company, and as a result, you get to vote in company decision-making, which means you get to participate in the direction the company goes. Now, I don't know how much of the company Vlad and his den of jackals plan to reserve for themselves and how much institutional investors will get their hands on, but I honestly think that tons of Robinhood users are going to buy Robinhood shares as a means of putting their voting power into practice. I'd love to see the retail investors in WallStreetBets take a chunk out of this company so it can start correcting its errors. I seriously doubt the retailer is going to manage to vote Vlad out of power, but I really hope that people try. And watching that pooling of voting power is going to make me really happy. And who knows, maybe just being accountable to shareholders will force Robinhood to be the broker we used to know and love. I still love the company's mission, I just question the execution. I'm skeptical that Robinhood will keep seeing this massive user growth due to their handling of the GameStop fiasco, among other things. So I'm bearish on the stock overall until it repairs its relationship with users and becomes more reliable as a broker. However, this IPO is going to go bonkers and be very unpredictable, so I'm not likely to take a position. If Robinhood demonstrates the ability to have customer service, I'll switch jackets and go bullish on the stock, since user and revenue growth are just too strong to ignore. We don't have an IPO date or ticker yet, but we are likely to see the big day in the second quarter. And finally, this whole video is basically about this one, the IPO I am most excited for, Coinbase. The OG of American-based cryptocurrency exchanges, Coinbase has touched our lives in so many ways by being an absolutely baller organization. You've got an exchange that invites you in and literally gives you free money for learning about its assets through Coinbase Earn. It's got the vast majority of its holdings in cold storage, so it's very secure and reliable as a custodian, and you've got rewards coming through as interest on select coins and tokens. Coinbase really is the flagship exchange on which every aspiring crypto wants to be listed. Coinbase is where I do most of my accumulation, not that I have a lot though, but regardless, you will not find a more reliable service than Coinbase. And did I mention they give you money for watching educational videos on a couple coins? Seriously, if you're not on Coinbase and doing Coinbase Earn, you need to join just for that free money. You know where to find the link. But beyond liking Coinbase's service, I could not be more bullish on this company's IPO. We're looking at a company that has so rapidly grown in revenue that this is poised to be one of the largest IPOs of 2021, potentially ever. Let's look at the company's S1. The number one thing I look for in a company's fundamentals is their revenue. If revenue is increasing, then we know there is demand for their product or service. Companies can find ways to trim expenses later, but it's really hard to manufacture revenue unless people like your product. When I look at this more than 100% increase in revenue between 2019 and 2020, I know Coinbase is keeping users coming back and using their service. And I suspect a lot of this growth is due to crypto becoming more mainstream and big banks, brokers, and high net worth individuals of all types getting their stake. Coinbase's record of trading volume seems to support that. Just look at the growth among both retail and institutional investors in 2020 versus 2019. Multiple orders of magnitude, and I suspect that this trend will continue. But we don't have to just speculate on that. After this S1 was released, Coinbase released its financial results for the first quarter of 2021. You won't believe how much money they made in just one quarter of 2021. 3 months, $1.8 billion. In just one quarter, they increased their revenue by almost 60% versus the previous entire year. Now, I'm not saying we can extrapolate this one quarter out over the whole year and assume they'll make over $7 billion in revenue, although that is the direction it seems to be going. The crypto space has been really hot so far in 2021, but we can't assume it will stay that way. People may lose interest in buying crypto throughout the year. However, the trend in crypto does seem pretty bullish, and it seems like every day we see more and more positive news for the industry. I expect this revenue growth to continue, and verified user growth supports that, with Coinbase clocking over 43 million users at the time of their S1. Back to the S1, it's also very important that we see improving earnings on growth like this so we can be sure that they're not having to spend all their money just to get sales. And indeed, look here between 2019 and 2020. We've got Coinbase swinging to positive earnings on this revenue boost, and earnings per share in 2020 of $1.40, up from a 50-cent per share loss in 2019. I don't want to get too ahead of ourselves, but if we extrapolate some Q1 2021 numbers, we could be looking at $8 per share in earnings. For comparison, Apple's earnings per share is $3.69, and the company is valued at over $2 trillion. Looking at Coinbase's numbers, its bread and butter revenue source is through transaction fees on their platform. This involves commissions on active trading, plus fees on scheduled deposits. Here's the statement I spent a long time digging for on their S1, underlined in red here. For the year ended December 31st, 2020, transaction revenue represented over 96% of our net revenue. This is a commission-based platform. You might ask, Mikey, Robinhood's got crypto for free. Why is Coinbase going to keep growing if they're still charging people to buy? That's a great question. When I was a young boy in Bulgaria, hey, we have to remember that on Robinhood and Webull and the other free crypto exchanges, you aren't actually buying the coin. You're just speculating on the price. You can't withdraw your coins off Robinhood. You can't withdraw and invest your Bitcoin onto BlockFi to earn interest. You can't even send or receive crypto on Robinhood. Coinbase allows you to actually own the coin and sweep to a cold storage wallet if you want. This is the difference between buying a Bentley on Coinbase and using Uber Lux to ride in a Bentley on Robinhood. Because of this, Coinbase slaps while Robinhood flops. As crypto becomes more mainstream, I have no doubt Coinbase will continue growing and become even more entrenched as the premier American exchange. Surely a $100 billion IPO means institutions will get first licks and drive the price into the stratosphere before us retailers even get a touch, right? Well, good news for us, Coinbase is going to do a direct listing instead of a traditional IPO. And that means a lot of things, but for our purposes, this means the company does not intend to create new shares to sell to institutions in advance. Instead, everyone gets a piece of the original shares. Palantir is a great example of a recent direct listing, when retailers were able to get in around $10 before the price settled in the 20s. With Coinbase doing the same, we've got a much better shot at getting in before prices balloon. That said, it doesn't mean Coinbase will be cheap. We're probably looking at no less than $300 a share, very likely more. I wouldn't be surprised to see Coinbase going over $600 within minutes of opening. People on Reddit have also brought up the idea of a stock split shortly after IPO, and personally, I would love to see it. As shares get above $500, the company should consider a 5-to-1 forward split to make their shares more liquid and accessible. But in my point of view, you get what you pay for, and Coinbase is worth its weight in Bitcoin. My sentiment on the service itself is strong, and my sentiment on the stock is obviously very bullish too. I haven't been this bullish on a stock since I discovered Lam Research, that's LRCX, in the low 300s, and now it's over 660. I've got $75,000 set aside for the Coinbase IPO, and I'm aiming for 100 shares. I hope I can get in on 100 with that much capital. I'm planning on even calling my broker to facilitate this trade so I can get in as soon as possible. Coinbase is targeting an April 14th IPO, so get those orders ready fast. Expect a listing price well above $300 out of the gate, listed under the ticker COIN, C-O-I-N. If nothing else, I hope this gave you guys something to chew on, and if you're not hyped for at least one of these IPOs, go see a physician because you have no pulse. Best of luck trading, and I hope to see you guys at the annual shareholders meetings. Catch you next time.